Hello and good morning. Welcome to my first morning review. I have made this video to give you updates on news that could drive the markets today. A side note before we begin, I have made this update impartial for China. This is as the last video was taken down for infringing YouTube community rules. I don't know if this was because of my comments on China, however I'm going to steer away from them. And to be honest, it made me feel close to NWA, because I've never been censored before, so it's quite an interesting experience. So let's begin. Anyway, the major breaking news overnight was the release of the Chinese GDP data. I provided a breakdown of the headline figure on screen. It showed a slightly better than expected figure for the third quarter, at 6.9%, compared to a consensus figure of 6.8%. and previous of 7%. This left the GDP on track to meet the Chinese authority's 7% target for the end of this year. It was the service sector that was the driver behind the growth, with it expanding at a rate of 11.9%. However, this was in part offset by a fall in the manufacturing and property sector. We will now take a look at how the markets are reacting to this news. Overall, it can be seen that the statistic has been taken as bullish for the markets. This is seen in the Shanghai index, which is up 0.9%, and the Nikkei 225, which has fallen for the day, however bounced 0.36% to form an extension on the news. This is a chart of the Aussie dollar, and it shows it jumping 0.46% on the time of the release to show a bullish engulfing. This brings us on to the S&P 500. As you can see, we started the week higher, with this bar here being the opening. However, before the release it tracked lower, down here. It posted a small gain on the news release, however these profits were quickly lost and is now struggling to rise. The rest of the market has taken the release bullish, however the SPX could be taking this differently due to last week when we had the return of bad news and good news for US equities. The reason for the return of this mode of thinking was that investors further pushed out their expectation for a Fed rate hike, with investors pricing in a less than 50% chance of a rate hike. This can be demonstrated on the daily chart. As we can see here, we had quite a strong bullish run from 30th of the 9th 2015 up until recently of the 12th of the 10th 2015. This run was driven by a poor data, being the NFPs, which came out considerably weaker last month. This led to investors reining in their expectations of a rate hike, dramatically leading to a strong run, demonstrating why bad news can be bullish for US equities. This was then continued last week when we had poor Q3 earnings and lackluster data release. This led to another run as Fed probability fell to an almost 0% chance. Watch the Fed funds futures today to see if this will continue into this week, i.e. whether investors will take this news as promoting Fed funds rates or cutting it. This will decide the direction of the S&P 500. We now turn to European markets. This is a chart of the euro dollar. I believe that European equities will be an interesting one this week. This is due to the monetary policy meeting of the ECB on Thursday. There is strong evidence that the ECB is under pressure to do more to help stimulate the European economy. For instance, Old 90 sent the price of the euro dollar sharply lower despite the USD weakening due to the Fed interest rate expectations seeing a hike further into the future. Now he commented that this ECB is clearly missing its inflation target. We can see the drive here caused quite a large sell-off and cut this run here quite nicely. There is further potential for investors to start pricing in more stimulus from today. This may be added weight by the Chinese statistics, as although it beats estimates, it is still down on a quarter-on-quarter basis, making the case for more easing by the ECB still valid. We further have European construction output out at 10 o'clock GMT, which could be a trigger for speculators to start exposing themselves to more stimulus. So watch this US dollar chart price action to see if this will be the case. If this is the case, there will be an interesting play on the DAX, or German 30 as it is known on eToro. The DAX has been held down recently by the commodity/Chinese story. This is that commodities have sold off sharply, which has affected Germany due to it weakening China, with Germany being a mass exporter. This means it depends highly on exports. Thus a reduction of exports will hurt the economy largely, with Chinese being a key export market. This has been aggravated this week due to the VW scandal. And right, I don't know if I can say this bit because of the last week Chinese thing, but I mean, even when China is investigating you for polluting, it shows that you must have done something dramatically wrong. So yeah, what this has affected is that it has made the price of the DAX relatively cheap. I mean, if we look here, these are Bollinger Bands, with this being a 75 mean, and these lines measuring standard deviations away. This is a technical way of showing where the price is. And if we look at it in comparison with something like CAC or France 40, we can see that it is lower price. See, the France 40 is up here, DAX is down here. This can also be seen on the Espanol 35 or ESP 35, which is up here, with the DAX down here. So that demonstrates the possibility that stimulus could really strongly play out on this asset, driving the price higher. But watch out for potential threats from the car industry, in particular VW. If any more negative news comes out on that, then we could see it sell off further. And remember to watch the euro dollar to see how monetary policy expectations are playing out. So that pretty much wraps up this morning's update. Good trading, happy trading out there and everything, guys. If you have any questions or comments, please leave them, and have a good day. Thank you.